elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground. We cover high growth investing in the mid and small cap arena. We're going to be taking a look at a company that serves as an intellectual property picks and shovels play towards the data center build out, or the infrastructure thereof, for computing power. So let's get right into it. All right. Ticker is SVCO. Svco Group trades on the NASDAQ, $9.93 a share. Market cap is $312.21 million. Where are they headquartered and what do they do? All right. So they're headquartered in Santa Clara, California. Some Silicon Valley vibes I'm getting. They're in the information technology and systems software arena, and that's exactly what it is. Okay, they provide a technology computer aided design software. All right, and essentially what their product is they're more of an architecture play, to where they have a software that does monitor efficacy of telemetry, of energy, of chips, and so forth. Now, they have other segments here, but for the general purposes of how you got to think about it, their end game, or their end product or impact to society, is higher performance in computing. See, this is one of those areas where big tech, Nvidia, Microsoft, Google, there's a lot of demand in their capex for the computing side of things. All right, higher computing is going to be very necessary for the AI revolution, and that will play an even bigger factor in the actual energy rate of these data centers, because these data centers, it gets real hot, they consume a lot of energy and so forth. So the cost of sales output on the actual end product of those data centers is going to be highly influenced, and their actual computing capability is going to be highly influenced on energy conservation, energy throughput, monitor of leakage, all of that good stuff. All right, so this is a necessary company in that space. Now let's take a look at some things. All right. Management team. All right, my impression of the management team: a lot of experience in the space. Now, some pretty older gentlemen, okay, I'll admit. All right, monitoring on their 10K. Okay, everything checks out. No red flags seen, except for one. Okay, this right here. All right, not really one of those red flags that is a common thing that shareholders look for, but nevertheless very important. CEO officer, 79 years old. This older gentleman right here, he's running the show. And, got it, in modern medicine in the United States, people are living longer, but you have to start questioning when they're getting into their 80s, who will succeed, or who will take over. All right, who will take over the reins. I've yet to get any of that commentary yet on that from the earnings call and doing some research on the company. I mean, he looks healthy, but you never can tell, right? And I don't want to sound morbid or anything, but these things are important, all right? If the management team, they're a little bit more dated and they're a little older gentlemen and ladies, then you have to have a plan. Typically, management teams and board of directors, they'll include a chief of operations officer in there, and it'll be a younger gentleman, and typically that chief of operations officer will succeed or exceed the take over as CEO when the time comes. All right. So that's something that if I'm a shareholder in this company, which I'm not, disclosure, I don't own shares in the company. That's something I would be taking a look at. All right, now that we got that out of the way, PCOB checks out, everything on the 10K checks out. Let's talk about operations on the company. So they're pivoting and they're rushing towards um, operational. They're rushing towards operational profitability. We'll do a sniff check on their valuation and look at their debt and cash. 6.29 million in debt, 10.03 million in cash. We'll go over here to their financial cash flow statement on a quarterly basis. They're burning around that much in cash, or 9.4 million cash burn in June, 5.3 million in September, 7.2 mil in December to finish out the year. Leverage free cash flows, um, quarter to quarter, sometimes it's positive, sometimes it's negative, inconsistencies there. So cash burn is a reality of this, but according to the earnings call, they have enough cash to get to operating profitability, which they're guiding in Q2. And this is the Q4. Last earnings was Q4, which we actually saw a nice little beat here. Stock is up. We'll go back to the chart. Stock was $3 and a little above $3.25, and then jumped to shy of $10 a share. So some dramatic capital appreciation in a short amount of time. I'm sure some shareholders are excited about that. All right, we're going to talk about the sustainability of that in a bit and what do I think about it all. But essentially, they're pivoting from TCAD to EDA on their business line, and it's not a complete pivot to where they're going to completely get rid of TCAD, but essentially they're more focusing on the internals of the business through cost cutting initiatives going on. All right. So I see it. I see the cost cutting initiatives happening from June of 2025 for that 6 month duration to December of 2025. All right. They're getting close to operational income. How do they get to operational profit? Well, it's going to be a combination of growth and cost cutting measures. All right. If you're in an architecture play, okay, if you're in an architecture play like this, SG&A and R&D are going to be some of your heavier items because that's really the bread and butter of it. You need a sales team, and then you actually need R&D and development for the design aspect. And improvements to the software and whatever offerings you got to offer. All right. So that's something to consider. When I go down to the net income portion, not seeing any. I'm not seeing any preferred share dividends or derivatives. I haven't spotted many, and if so, not worth mentioning for this actual company. Very, very straight up company. Nothing crazy or alarming. Um, and that's something that's good. I like things to be simple. All right, a lot of these companies I look at, there's always several dual class structures or tri-class structures of shares. This share outvotes that. This share doesn't participate in this or that, and not I don't get that with this company. All right, they just got their stock, and that's it. So now there was some stuff that I caught on the 10K that they may issue out preferred shares from time to time. I'm not seeing any of that thus far, but is a possibility. I don't know if they actually do that in the future. Time will tell. All right. Diluted average shares. All right. So some dilution, but honestly, for how much they have been, how much growth and how much growth with a combination of operational efficiency they've been providing, and keeping the business afloat with their cash burn, I think they've done a pretty good job with shares outstanding on a dilutive basis. We'll go to their cash flow statement. We'll go on an annualized base. Some things that I've noticed, year over year, stock-based comp is cut over 50%. Okay, and and if I look at insider ownership, bear with me. Insider ownership sitting at 61.90%. Institutional ownership is 23.56%. We'll go to actual insider activity. A lot of buying, all right? A lot of buying from insiders has been happening. We see a slew of buying right here down in the $5 arena, and then more buying here into sub $5, okay? So with the actual amount of insider ownership in combination with lower stock-based comp, a lot of confidence within the inside of the company that the stock's undervalued, all right? Or was undervalued, okay? So there's that, all right? Now, generally speaking, what do I see this as, okay? As what's the investment proposition of this company? Well, some questions that I got on the actual ticker analysis is, will they, is this a niche? Is this a niche area? Or can they become a mid-tier, provider in the actual space? All right. So with the actual capex and build out infrastructure needed for higher and the need for higher computing, right now you can classify it as a niche total addressable market of business model because the actual market is not established yet. So I assess they're going to get several tailwinds throughout the years due to that need of design build out for data centers and chip efficiency and the architecture thereof. So there's a use picks and shovel case for this company. And the beauty about their business model is, you know, they have the intellectual property that they can license out to big players and make a lot of money on that B2B basis. So I'm not too worried about their actual moat and the necessity of their needs case for their business. Um, could this provide good shareholder value throughout the years? The answer is yes, if they continue on this path of profitability and they manage the financials right. Okay. So just because the company is guiding operational break even in Q2 and then operational profitability in Q3, I'm assessing that there's probably going to be capital raise in a dilutive event to happen this year in 2026. I wouldn't be surprised. I think that once they arguably they can raise capital and issue out more shares now, but due to the stock price action. But the right thing to do is probably get to prove out operational profitability, and the market will reward the stock. Stock will go up, and then they will issue out another batch of shares and put more cash on the balance sheet for the next goal of actual GAAP profitability, which they will start working on. If I look at the profitability metrics, quite a while for GAAP profitability to happen. Operational profitability and then is next, and then positive EBITDA is next, and then working their way down to the net income to the bottom line. All right. Once they raise capital, though, I project free cash flows will turn positive annually, and that will serve as a synergy to slow cash burn. Depending on how much cost reduction they do, they can race to GAAP profitability in a matter of 2 to 3 years. And that also depends on how much growth they're set to put out. Speaking of, let's look at their growth rate right now. So consensus estimates got them growing shy of 10% at 9.33%. I think they do double digits. Honestly, I can see them doing 12%. Given the actual capex and demand for the architect for the infrastructure of these data center build outs and these microchips. So I wouldn't be surprised to see 12 to they could do 12, 15% if their actual sales and marketing team ramp up and their executives start rubbing shoulders and, talking to the right people. Okay. So that's promising, or not promising is probably a lack of a better term, but the potential of that double digit sales growth is there. All right. I probably give it a 75% chance they do double digits this year. All right, in the 12 to 15% arena of sales growth. 2027, I think, is skimped. I think 2027 is a lot of execution on actual data centers. That's what's going to happen in 2027. And, I wouldn't be surprised if, reaccelerated sales growth even after 12 to 15% happen. So, let's look at the street on the ratings and what consensus analysts got going on. On the average, the average analyst thinks in a year from now the stock's going to be $9.17 on the average side, and then on the high side they got the stock at $12. Okay. In the immediate turn, or the 12 on the low end, they got it at $6. In the immediate turn, I can see this going back to $6. And I can also, on the long 1 year out, it's possible this stock stays around that $9 range. So I can see $12 as well. It just all depends on market sentiment and what's going on, all right? So, I mean, I know very broad and bland answer. I'm usually giving out more specific projections, but this is just one of those cases, all right? But value is value, all right? The price is what you pay, the value is what you get, all right? Long term, going back to that question, is this a can this be a mid-tier a player in the space? Can they grow? And the answer is yes. They can provide shareholder returns, managing the financials properly and doing cost cutting initiatives and getting to profitability and growing. Okay. I think that, me personally, I think that they need to raise a little more capital. Nothing crazy. Maybe they need to put 30 million, 20, 30 million on the balance sheet later on this year and then use that as runway to actual gap profitability. But I think they need to wait. Me personally, I'm thinking they need to wait for operational profitability and market sentiment to get the stock higher. Okay. So that's just my take on it. Now, going back to it, what is the investment return that I can potentially see with this company? All right. And the total addressable market and so forth. Well, I think that I'll admit there is a little cap out on their total addressable market. I think that, maybe they're under the impression that their total addressable market is around 250 million, 300 million ish. I think they got more total addressable market when infrastructure starts getting built out. I can see this company going to a mid cap at the highest at a maturity. So, it's possible, but it's going to take some time. Maybe, and it's going to take about a decade for actual real build out to happen, all right, and a maturity of build out. And I think these guys are going to participate in it. So you can be looking at, 2 to 3 billion, 5 billion market cap with execution in that demand feeling for architecture with these data centers for more efficiency and energy. So there's always going to be a need for solution for their designs, of refining of designs on these data centers. Okay. So there's another question, higher tolerance risk investors. Okay. Um, if the position ain't trimmed, I think now's an okay time to trim a little, but all in all, you guys know me. I'm not an advocate for trimming positions. But with the actual return, the returns that I can foresee this stock doing, you're probably going to average a 25% CAGR, which, isn't dramatic, I'll admit, not compared to some of the investments I'm in, but, it is what it is. That's kind of just what I foresee with the stock. All right. With well execution and those tailwinds coming in. I hope you guys got value out of it. Thumbs up, subscribe. Please show me some support so this content reaches more people. Check out my Patreon. Get access to my deep dive, more direct access to me, get a community of like-minded investors. Up your game, become a better growth investor. I show you how to do this. You get development, mentorship, community, exclusive content, access to exclusive content you will not find anywhere on the actual web. Okay. 15 bucks a month, you really can't beat it. You get access to all my hot stock picks. Click this button here, pay annually and save 20%. Okay. And then lock in and start increasing skill and, enjoying what I have to give. With that being said, I thank all of y'all for your support. I love y'all, and until the next time, take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
One thing to question your mind, it's another to question your eyes and ears.
Remember how you felt when you were alone? Where's that? You were miserable. That's why we're here.
You're not gonna do it, are you? Change the world. You're afraid.